Good morning, everyone. This is Brad Matheny. Today is the 21st of November. This is the Plan Your Trade video for the 21st. We're looking at a Harami-Inside pattern today on the SPY cycle patterns in trending that represents bullish trending in a moderate warning phase through this rotation. Now, if you remember, I had talked about what I called my anomaly pattern, setting up right over in this area. And I believe we're moving into the anomaly pattern right now. I believe we're going to be looking at a downward cycle trend as I had been drawing here for quite some time. Yes, there's my cat, the morning cat. Let me get rid of some of these lines and let's take a look at what's actually going on with the market and how we're setting this up. So we're going to get rid of a couple of these. We'll leave this lower support zone and we'll leave this buy and this. So now understand that we are looking at this downward cycle phase. So we've got this blue excess phase peak pattern playing out. You can see this blue phase here flagging into this area, breaking downward, trying to move into consolidation. We've got deep low set up here, which I'm going to explain in a minute, rolling up and consolidating. So now this is a broad rotation in the cycle phase. And we need to kind of be cautious of this move here because this would normally be our flagging low. This would normally be our phase 3 consolidation low pattern. We got below it, we rejected. We have yet to get back above this upper channel here, which would be our original flagging high. So we need to remember that inside of this range, we are still technically in this downward pattern until we get up above this level, 598.74. So remember that, and I'll try to draw this, I guess, in blue. Let's do these in lines so you can see them. So until we get above this level as blue and or below this level here in blue, we're technically just rolling around inside of this phase 2 flagging high to between this phase 3 low right down here. That's the phase 3 low flagging. This move here indicates that we had a new lower low. Okay, but now we've rolled up into higher highs over here, higher than this level, and of course higher here than this level. So we're kind of pushing back to the upside right now in the market. The SPY cycle patterns indicate that we're going to have a Harami-Inside pattern, then a temporary bottom pattern. Then we move into this top resistance, breaking, carryover, inside breakaway, rally in a counter trend mode, and then a rally into a trending mode. Now remember, this counter trend rally on the 28th doesn't exist because that's Thanksgiving. So if my anomaly pattern plays out the way I expect, and again, I've gone over some of the data with you related to the anomaly pattern, then we're going to have this kind of meltdown. And that's what I've drawn going out, is essentially a big, broad meltdown into this area. Now, secondarily, I talked about this big, broad excess phase peak pattern that is setting up on a larger scale. And let's take a look at that. Moving up to the high, coming down to this low, moving into this flagging formation. Set this up as an orange color. Set that up as an orange color. And this flagging formation, when it fails, and it should fail, will potentially move us down into this buy zone, consolidating into this lower potential zone, giving us that basing mode that I suggested would take place over here into the December 11th through 15th buy area. So remember, originally I had suggested that we were going to get these buy zones, and the first one was going to be really back over here near this low around Thanksgiving. The second one was going to come out here near December 10th through 15th out in this area, prompting a very big rally phase. So that was my original prediction off of the anomaly zone. And if we get the breakdown that I am expecting, which I've drawn as the current cycle patterns here, we're going to be looking at a low either out in this lower zone right around or after Thanksgiving. And I'll make that a little darker. And or a secondary low back out here, which I don't believe will be lower than this low. So given where we're at, guys, if we get this breakout down to here, I would then be expecting a bit of a rally up into this area and then moving into a rally into Christmas and the end of the year. So this is again where I'm at. Now, someone wrote on the YouTube channel that, oh, I failed. I told everyone to get to 85% cash over here and to ride out the election. Now, I want you to understand that that was really in regards to your account. So the way I suggest things to subscribers and followers is, I'm trying to do this here so you understand. You have, say you have 100 grand in capital. Okay, you would have roughly 10 grand in cash, way I would suggest. You would have about 70 grand invested. Now remember, invested is long-term investing, and you would have about 20 grand in for trading. So when I'm referring to 80 to 85% cash, I want you to remember that 80 to 85% cash is for the trading account. You would still be, 70% or $70,000 invested in the markets. And when you figure this out, you've got 100 grand, you've got 70% invested, you got $10,000 in cash. If you were to pull out of your trading percent down to about 4,000, you would essentially have so do the best 74. You would have about $75,000 invested for trading or investments, and you would then have about 25 to 26, if I'm doing the math right, K, safely in cash. So when I'm talking about the 80 to 85% cash, this is related to your trading account. Okay, that's all I'm talking about. Your total investment account should be broken along these structures. This is a safe, fairly safe investment structure. The reason why you have the 10% cash is as a reserve to be able to load up on potential trading trading opportunities when they show up, or to be able to take advantage of some long-term investment if you want to. The whole idea is having a cash reserve is very important for you to be able to take advantage of unique price anomalies and setups. If you're always 100% invested, you never have a cash reserve. It's kind of like you never have a money in your savings account in case you need it or in case something shows up. And that's why I recommend this type of a structure. It's basically so that you have the ability to allocate some into trading. Now you can mess with these totals. You can put, so this is basically 10%, and this is 70%, and this is 20%. So you can mess with these numbers and you can allocate them accordingly. In fact, I recommend that you do occasionally readjust your numbers. But again, when we were looking at what I said with the 85% cash over here, right there, I want you to remember that that's just 85% cash in your trading account. In other words, don't be swinging for the fences through this wild rotation before and after the election. If I am correct and we do get this breakdown event, you're going to be looking at the markets have gone absolutely zero. And if you take a look at, oh, well, Brad, some guy wrote that you missed this whole move. Okay. I missed a 4.5% move to the upside based on an election that was hotly contested, and we really didn't know what the outcome was. If you've lived through enough elections like I have, remember I'm older, let's put it, but long and short of it, you realize that the markets can react very violently to election outcomes. Okay, so we do not want to be swinging for the fences through elections unless you're willing to take your lumps. And that's what I kept telling everyone. If you're willing to gamble and take your lumps and, either walk away a hero or walk away with zero, then gamble away. And that's not trading and that's not investing. That's gambling. So if you want to be a gambler, go for it. You can ignore what I say, put everything on red or black, and give it a shot. I guarantee you, the first time you hit zero, you will decide to be more of an investor and a trader. Because after you blow up your account 5 or 6 times and end up at zero, you'll learn that that's not really trading or investing. That's just gambling. And like I said, casinos will happily take your money. Go for it. The old saying is, so anyway, long and short of it, I used to know a bunch of people that were perpetual gamblers. I worked in an environment where everybody loved to go out and play their poker and play their slot machines. And it was so funny because keep that active. That's my server running. These guys every weekend would tell me about how good they would do. Oh my gosh, I made $700 on the slot machines, or I made $900 on poker. And you know what? These guys, I swear to God, these guys were like some of the most dirt poor people ever. Didn't have a car, sometimes couldn't survive or pay for their own lunch, but they were always winning. They didn't have their own houses or living in somebody's back bedroom or whatever, but it was just the funniest thing. They were always, I made $900. You should, I'm great at gambling. I never lose. Okay. And I kept asking them, well, where's your Rolls Royce? Why don't you have your own house? If you're doing so well, you ought to have like 60, 80, $100,000 stashed away somewhere. And they'd be like, well, and it's because, yeah, gambling, sometimes you get really big wins and then sometimes you go home a zero, and you just got to deal with the fact that you're blowing your money instead of using it wisely to trade and invest. So anyway, enough about that. Somebody wrote me on another site, let's say, and said, hey, Brad failed. He told us to get 80, 85% cash, and we should have been 100% invested through this move. Yeah, watch how this anomaly event plays out, and watch how this plays out. We're going to be looking to buy back into these zones, this green zone and or this green zone, if it plays out the way I expect. Okay, so now QQQ is looking to do the same thing. I haven't carried these out. Looks like I've got the overnight activity playing out. Let me come in here. Extended trading. I was watching the NVIDIA yesterday. I haven't drawn the cycle patterns out on this chart, but we're looking at the same type of a setup here. This is a 1 hour chart. So again, I'm really looking for that breakdown. You can see the big number 2 playing out here, the rolling through this cycle, moving down into this zone. We really have those buy zones out here. I'm going to draw this. Look for December 10th or 11th. Let's mark it here. So mark that as kind of a dark green. And this is Thanksgiving. So we're really kind of looking at these buy zones back over here. So we have our first buy zone in this area. And we have our second buy zone back over, in this area. And that's what I believe the anomaly event is designed to produce. It's a washout low that sets up this pre election rally phase or post election, pardon me, rally phase into the end of the year and into early January. So this is the end of the year. We'll mark this bright blue. And this is December. This is Christmas. We'll mark this. I don't know. Let's mark this a dark blue. So what we're looking at here really is, kind of this rolling pattern through here into the end of the year and beyond. And that's what I think is coming. This breakdown, this part of the anomaly setup, looking to be a fairly strong breakdown, rolling into a kind of a washout low. I'm guessing 464 to 472 down here near this low, maybe up into this area. So understand that we could get this same type of washout setting up right in this area and or down into this area here. So we've got to watch and see how this plays out. Okay, we've got the excess phase peak pattern number 2 here, rolling into consolidation, potentially breaking down into an ultimate low. Then we have the secondary excess phase peak pattern rolling here in red, should break down to consolidation, then potentially break down to an ultimate low. So we're really looking for these 2 separate areas right here that I've highlighted. Come on, there we go. And we're looking for these 2 separate areas for the anomaly low. So we'll see if and how this plays out. Hopefully, I think that's the right one. There we go. So we'll see how this plays out. It means that we're looking at either way. It means that we're looking at a, from where the NQ is right now, maybe a 3.5 to 6 or 7% downside move. So be aware that it looks like we're going to get potentially a breakdown event here over the next 5, 6, 7, 8 days into Thanksgiving and maybe a little bit beyond. So this area here is really, more like this and more like this, kind of a sideways basing pattern. Okay, we can move to gold and silver. Gold and silver are attempting to rally a bit. We've seen a bit of a rollover here. I will warn you that gold and silver, through a breakdown event, if we get one, could move easily down into kind of a rolling kind of a base pattern here before we continue a bit higher. This would be kind of a panic mode into some selling through my anomaly event. So we have to stay patient here. We do have this larger breakaway. We are in this breakaway pattern. We may get a bit of rotation and consolidation before we rally. I'm sorry, my cat's just going nuts over there. Morning time for a cat. I swear to God, if the sun's coming up, they love it. But again, stay cautious. Silver has not broken out of this consolidation range yet. So you can see here, we've got this rolling. I'll go off the rejection points here. This rolling high up here that we had right here in gold. Gold rolled above this consolidation range and this flagging period. Silver has yet to do it. So gold might be a bit overextended here. I would not, moving into what I just showed you back over here, the SPY and the QQQ rolling downward based on my predictions. I would not, and again, I would not suggest that we look to see any big, broad downward trending. Okay, and I got to make sure 25th, 24th, 23rd. Oh, I may have extended these out a bit too far. 21st. Yeah, I guess I did. So this has got to come back over here to here. And this has got to come back here. Monday, Friday. To there. This has got to come back to here. Thought something looked funny. So this has got to come back to here. Tuesday, Wednesday. And this has got to come back to roughly here. Let's get these set up right. Friday, Tuesday, Wednesday, Thursday. What do we have here? So we have a 4:30. We have Thursday. Yep. And then coming into Friday right there at 9:30. Monday at 9:30. Tuesday at 9:30. Wednesday at 9:30. Thursday or Wednesday, Friday. Okay, that's Thanksgiving. And then we come in here Monday at 9:30. How come this one is off? Friday, abbreviated holiday hours, and then we come in here at Tuesday at 9:30, and then we come in here at Wednesday, Thursday, Friday, and I think that puts us where we need to be. Monday, and so there we go. A little better. See what happens when I take a look at the data. So again, rolling through this pattern, we have an abbreviated base bottom happening around Thanksgiving, and then we'll roll into this sideways pattern. Eventually, we will roll out into this December pattern or this January pattern, but it really does play out as a zone of buying here. Let me correct this. Correct that. come back over here, zone of buying potentially in this area or deeper into this area, and then eventually into this end of year area right here, moving into a rally. So our two separate zones of buying are really here and here, with the potential of a deep low down in this area. And again, I apologize. I was trying to draw all this stuff this morning and obviously didn't get it right. So better to fix it than to realize it after the fact. So there we go. There's our breakdown. There's our rolling gold and silver. Like I said, if we get a breakdown in gold and silver, or in the markets through the anomaly event, we could see gold and silver struggle through here, but ultimately it's going to move higher. I'm going to tell you right now that this big selling pressure is going to wash out and move higher. And lastly, we go to Bitcoin. And remember, very clean move here in Bitcoin. You remember what I talked about regarding this rally phase, and we had go long. I'll make this green and go short below this level. We got long over here, and I put it as a confirmed long or a moderate long up in this area. On this breakout, I drew this arrow telling you that we had gotten above this high, indicating that we were in a moderate long trade looking to break above this high level here. We did. I went confirm long, told you then that we're going to 97.50 and then 100 to 0.5 thousand. Well, here we go, rallying right up like a champ on our way up here to 100,000. We're probably going to run into some resistance right below 100,000, but making a good solid move to the upside. This was our big rotational consolidation kind of flagging. So remember, we had come up from this level, moved into this big flagging. Now we're rolling up to the ultimate high. The ultimate high in Bitcoin could be up into this 104, maybe 110 area. I drawn it earlier, but we can be potentially rolling up into this area here as an ultimate high in Bitcoin. Going to be very interesting to see how this plays out. Huge move. I mean, we're talking about a move from down here into 60,000. I mean, in reality, if we come, this is an hourly chart, but if we come back out here to daily, you'll see that, we had a move from 24,000 back in 2023, 12,000 back in 2022, all the way up now to 100 grand, almost 100 grand. Very strong move, been nailing it all the way through. I'm going to tell you again right now, I think that we're on our way to 100 grand, 100 to maybe 102, 103. But then we're going to be probably running into some resistance up around 106, 107, 108. And we'll get to that as we play it out. So again, sorry for the long video. I want you guys to know what's going on, and I will talk to you later. Let's go get some today. Just remember, be aware that this anomaly event is setting up, in my opinion, and you laugh at my charts all you want, but I think you're going to find that this sell here, this big number 2 breakdown, what we're looking for is some sort of either breakdown event into my anomaly if it happens, or we are looking for a rally phase coming up out of here, breaking through this flagging high pattern right there. And so this is our zone for buy, and a breakdown below this zone right here would confirm our downtrend, indicating that we are looking at a deep lower low. So right now we're in this consolidation range. We're in this flagging. We're in this potential flagging zone. And I will highlight that, we do have this current flag high right here, which would indicate if we, Granted, we haven't broken down yet, but this is now our current flag high in this secondary flagging. So we could continue to set a newer high. We could come all the way up here in flagging and then roll down and break down. But this is kind of what I'm watching. If move above this 591 area, let's call it, would indicate that we are going to continue to move in moderate flagging like this somehow. So be aware that, and it looks like we're at 592.86. So we're continuing to flag, everybody. We haven't broken down yet, but remember, this is our big breakaway level right there. We've got to get the markets above this level, 599.16, in order to continue, and really above this level too, in order to continue higher. So we've got to get up above this 600 level for a big breakaway rally phase to continue. Right now, we're not seeing that. We're waiting for this breakdown mode to happen. That's most logically what's next. Okay, guys, that's it. Talk to you later.